my screen shared here as well.
All right. Well, good morning, everybody. It's July 1st. Well, half the year is gone, and we've got a lot of political action happening with the ACA world. It's very dynamic, a lot of changes. Medicare world is slow and steady. I mean, no changes whatsoever that I see on the Medicare side. So the one thing that I'm gonna think that next year and maybe the next couple of years going forward, that a heavy emphasis needs to be on cross-selling, adding the ancillaries, whether it's in the ACA world and you add dental and vision, you add an indemnity plan. On the Medicare world, you add a hospital indemnity to an MAPD, you add dental and vision to your med subs. But now, with both of those lines of business, you're under 65 and you're over 65. Now, here's an additional ancillary that you can add, which is cancer, heart attack, and stroke. So with that, Bella's from Heartland National. Hey, welcome. Thank you for being on today. And I'm going to let you take over.
Absolutely. Well, thank you so much, Luis, for having me back. And I'm excited for the opportunity to train you all on our cancer, heart attack, and stroke product primarily. I do want to start for just a moment here with the background of Heartland National and some of the exciting products to look out for as we continue through the rest of 2025. So, as a company, we started with a Medicare supplement in the early 2000s, and since then have diversified into more of the modernized products within the ancillary space. So, introducing a hospital indemnity, then a short-term home health care, and our most recent ancillary product, cancer, heart attack, and stroke, which we'll spend most of our time today focusing on. In the rest of 2025, we do see a bright future ahead of us. We navigated into the annuity space a couple of years ago now with our multi-year guaranteed annuity. Very simple product. If you're not in the annuity space yet, this is a wonderful opportunity to learn about the product. It's a simple way to navigate into that annuity space, making sure that you fully understand, grasp the concepts. And then along with that, we're launching a fixed indexed annuity in the next month or two. So very exciting product there, great opportunity for commissions and so on and so forth. So along with that, in August, we are launching a new revamped version of our hospital indemnity plan. So the current plan we have was structured back in 2017. Of course, since then, we've seen changes in Medicare Advantage plans, such as copays and maximum out of pocket, so on and so forth. So not only do we want to make sure that we're reflecting on those copays that we see on the plans, but also staying competitive within the hospital indemnity market, making sure that we're aligning with what competitors have to offer. So with that new product, we'll have an extended GI window, flexible base plan options. We'll have new riders. So lots of exciting news, lots of changes coming with that new product that again will be live just in time for AEP. So as
Bella, I'm
more
going to add
information,
something.
yes.
I just got back from MDRT, which is a life insurance award, which in 20 something years we've never qualified. We made it in 2024. The trip was last week. I was in Miami. And
Wonderful.
the agents that I talked to, and this is a national trip. So there's people from all over the world. And I would say that a huge portion of their sales that they qualified for to win this trip is annuity sales.
Mhm.
And what it's coming down to is a lot of people out there are afraid of the market. Okay. But they want market participation. So they want to get the benefit of the market, but they definitely don't want the negative of the market. So what I'm seeing is a lot of money moving into annuities, the safety of an indexed annuity with a floor, so you may not lose money, and then you participate on a portion of the gains. I was just like, wow, there's just a lot of movement of money towards that. And
Absolutely.
because on the market, not only do we have the normal market risk, but we've got a huge political risk to the market. We got our president, he says something and it can cause the market to go this way, or he says something else and the market goes this way. And so it causes a lot of craziness on the market. And now with the safety of annuities with a floor. Um, yeah, I'm getting a little more into it. I'm seeing the value of annuities. So you agents that don't have this option, this is something really good to consider.
Right, absolutely. And I'm glad you brought up those points. A couple things about that. One of the terms we like to use with annuities is it's essentially putting insurance on your money. So these hard-earned savings you worked your entire life for, whether that's your 401(k) or whether it's cash buried in your backyard, this is putting insurance on that money, protecting you from the losses. Your floor is zero. You're never going below the principal that you put into the annuity. However, you do get to participate in the gains. So when the market does well, or whether you have a fixed rate or you're tied to an index, whatever that looks like, depending on the annuity, you still get to participate in those gains. So the other thing with that is our goal as we're launching this fixed indexed annuity is to come out with trainings particularly for Medicare agents or ACA agents, right? So those individuals who you already have the leads right in front of you. You're already sitting across the kitchen table or you have them on the phone to work on their Medicare plan or their ancillary plans or whatever that may be. So the leads are already there. All making that annuity sale is just a matter of asking a couple of questions. Are you retired? Did you participate in your company's 401(k) or 403(b) if they were a teacher or a nurse, something like that? And with that, you can start to uncover the money and the opportunity that these individuals have to protect that money, protect their savings, and still, like Luis said, participate in the gains without having the negatives or the losses that are associated with stocks in the market. So with that, I'm happy and ready to go for you because it is such an incredible opportunity to increase sales, qualify for trips if there are incentives available to you, but also adding that extra layer of protection and being a one-stop shop for all of your clients. Not only are you helping them with their health and life needs, but with their money as well, right? Protecting that money and making sure that they are safe while as they navigate into retirement. So, just a
100%.
couple,
I'm with
yeah,
you.
yeah. Yeah, I love it. So looking on the marketing side, we have a very agent-focused sales team over here. You have me as a direct point of contact. I'll make sure you have my contact information at the end of today's slide deck. So anything that you need, any questions you have, you can reach out to me via my cell phone number, text me, call me, email me, whatever works best for you. And that's really my goal is to support your success, right? So anything that I can do to help you in that aspect, I'm more than happy to. So, without further ado, we'll get into the cancer, heart attack, and stroke plan. First, starting with state availability, all of these orange states you see here are the states that we're currently live and offering the product in. We did recently receive approval from Montana and Maryland, so those will be live in the next couple of weeks as our back office is preparing for the launch there. So, a couple additional states we're excited to welcome. And I do want to take a moment on this slide here and talk through a couple of testimonials. I think as I've had the opportunity to train agents on this product, I've also learned their personal experiences and how a product like this with a lump sum payment could change someone's life or change their family's life. I have a hair somewhere on my face and I keep messing with it. I can't get it out. Sorry about that. It's driving me crazy. There we go.
Oh, there you go.
Anyways, I have had the opportunity to learn their personal experiences and how a product like this can change someone's life or change their family's life or change the trajectory of their treatment, so on and so forth. So I do want to share a couple of those with you today in hopes that it'll open your eyes in the same way that it's opened mine. So I was speaking with an agent, training him on this product one-on-one. He had lost his son to cancer 3 years ago. So he was explaining to me that they were living in New Jersey and the son was sent to the University of Iowa to receive treatment for the aggressive form of cancer that he had. So not only were they paying for the son to live out of a hotel and travel to and from the hospital, but for their family members to travel back and forth and support him during treatment while still maintaining those full-time jobs in their hometown. So with that, treatment, which, as we know, is almost never covered by your major medical plan. So this was a completely out-of-pocket cost that they were willing to accept, but they didn't have any additional protection in place to assist with those out-of-pocket exposures. Along with that, one of my coworkers here in our home office has a sister going through chemotherapy right now. She chose to use a cold cap to prevent hair loss while she goes through chemotherapy treatment. That wasn't covered by her major medical plan, and it came to be almost $3,000 out of her pocket for that one round of treatment. So if she endures multiple rounds of treatment in the future, that's an out-of-pocket exposure that resets every period of care. So with these stories, I think it's important to highlight that when people think about the costs associated with cancer, they think about this top bullet point. Their medications, copays, coinsurance, deductible, right? What they owe for the treatment aspect. But what people fail to consider or acknowledge when it comes to that cancer diagnosis is the non-medical costs that are associated, right? The travel and lodging, if you're sent to a different state or across the country to receive treatment, that's not covered. Your plane flights or your hotel stays or your gas mileage or parking while you're at the hospital, meals while you're at the hospital. There's weight fluctuations, so needing new clothes or dietary restrictions, only being able to have liquids or eat certain things, whatever that may be. So I think these stories obviously don't have the intention of scaring you or scaring your clients into needing a plan like this, but opening their eyes and allowing them to consider these out-of-pocket exposures in a comprehensive overview of not just looking at the medical needs, but looking at those non-medical needs as well. So with that, we'll move into the rate structure of this plan a little bit, starting with the fact that it's issue age rated. So these rates do not increase as the client ages. So if they sign up for this plan at 45 years old, they keep that 45-year-old rate even as they get older. It's not increasing as they age. We have 4 coverage types on this policy. So an individual plan, a couple plan, a single parent family plan, or a family plan. So you can claim dependents under the age of 18 and they can stay covered up until the age of 26 on those family plans. Now, number 3 is really unique and a great feature of this product. We calculate premiums based on the age of the youngest spouse. So if you have an individual, and recently I'll give an example. We had a husband who was 67 and his wife was 35. And they made that wife the primary applicant and applied, got the 35-year-old rate for the both of them on a couple plan. And again, it's issue age rated. So that's the rate they keep for the lifetime of the policy. So to point out here, the youngest spouse must be the primary applicant on that application in order to qualify or in order for the premiums to be calculated using that age. These rates are also unisex, so males and females pay the same rates, and you need tobacco. We don't ask any health questions or charge a higher rate additional premium for the use of tobacco. That's very rare to find on a cancer policy and very rare to find on a heart attack and stroke policy as well. Number 5 down there, our premium payment modes don't look any different than our other plans. You can pay annual, semi-annually, quarterly, or monthly. We do have direct bills available on paper applications. Otherwise, the e-app uses a bank draft, so their account and routing number in order to draft those premiums. All right, going through the application process and underwriting, kind of waiting periods, things we have in place here. I know this slide looks a little scary, but it's nice to have it all in one place for you, right? So you kind of get a full understanding, a summary all on one slide. When you're choosing a base plan for this product, you can choose either lump sum cancer or lump sum heart attack and stroke. That doesn't mean you can't get coverage for both. If you choose one as your base plan, you can add the second one on as a rider. The premiums don't look any different, whether it's a rider or a base plan. The one thing to note here is the second row, the rider benefit amounts cannot exceed the base plan benefit. So, for example, if you've set your base plan of cancer at $10,000, your riders can only go up to $10,000 in coverage. So if an individual wants $20,000 in heart attack and stroke coverage and $10,000 in cancer coverage, I would recommend making heart attack and stroke that base plan, since that's the highest benefit amount, and then all of the other rider benefit amounts will fall under that. We have those built-in recurrence and restoration benefits that apply to both cancer and heart attack and stroke, again, regardless of which one's your base plan. So it's not really changing anything depending on which one you've made the base, other than making sure that the highest benefit amount has been made the base plan. Issue ages, how old the individual is when they're applying for coverage, is 18 to 90 years old. It's guaranteed renewable for life. So as long as the policyholder is paying premiums, they can continue to receive that coverage well beyond 90 years old. They just have to apply and have it in place before then. Again, you can claim dependents under the age of 18 on those family plans. And as a reminder, it's issue age rated. So those rates are not increasing as the client ages. As far as lump sum benefits go, you can choose any benefit increasing in $1,000 increments between $5,000 and $75,000 for both cancer and heart attack and stroke. And that amount, that benefit amount, is paid out in a lump sum when they receive a diagnosis or a qualifying event. They have a heart attack or a stroke, heart transplant, etc. We'll get into the different coverage percentages in just a moment here. The pre-X on this product is 12 months, so any claims filed within the first 12 months of the policy that are related to a pre-existing condition would not be covered. With the script check and the health questions, I don't foresee us having any issues with that pre-X period, but something to keep in mind if the individual is going through some sort of pre-existing condition that may affect their eligibility for benefits here. Next, we have a 2-year contestability period. So for claims filed within the first 2 years of the policy, we would have a HIPAA form signed from the client and pull medical records just to make sure that the applicant was truthful on the health questions at the time of the application. So this by no means is saying that no claims are paid out within those first 2 years. Since we don't run that medical background check on the front end, this is just put in place to protect ourselves against someone who's lying in order to get their coverage. So making sure they didn't previously know that they had cancer, or they didn't previously know that they needed to go have a biopsy done, so on and so forth. So just taking that extra precaution for the first 2 years, making sure that they were truthful on those health questions. For a waiting period, cancer coverage has a 30-day reduction schedule. So if the individual is diagnosed with cancer within the first 30 days of the policy, we would pay 10% of their benefit amount. Again, only if they've received that diagnosis within the first 30 days. After that, they would receive 100% of their benefit. Then for heart attack and stroke coverage, we have a 30-day waiting period, so no benefits are paid within those first 30 days if the individual were to have a heart attack or stroke. And like I said, after those first 30 days, that benefit goes up to 100% payable. We'll go over these recurrence and restoration benefits on the next slide here, but I want to take a moment if anybody has questions so far about this
Hey,
process
Bella,
application. Yes,
I lost audio.
you lost audio from
Oh,
me?
me, guys. Oh, you know what? It's just me. It's my headphone. I'm
Oh
sorry.
no. Okay, good, good. Everybody else can hear me okay? Get a thumbs up or typed in the chat, maybe.
Perfect.
Awesome. Okay, great.
Yeah, we can hear you very well, Bella. I have one question.
Absolutely.
Nice to meet you, though.
Yes, you too.
In case of someone gets diagnosed with cancer, and they take the benefit, and then they get healthy, and then
Mhm.
years later they have um another problem. Could be cancer or a heart attack
Right.
or something. They get the benefit again,
That is
or
a great question, and that's what this built-in recurrence and restoration benefit is for. So on this next slide here, I'll kind of dive in. We want to make sure that that individual has protection against a subsequent diagnosis or a second diagnosis later in their life. So for that exact reason, we've built in those recurrence and restoration benefits to the base plan. So there is no additional premium. They have these benefits as soon as they have that policy in force. With a lot of carriers, you'll see that that's maybe structured like a rider, so they have to pay an additional premium to have those recurrence benefits. Or you may see that they have a 10-year scale. So it takes 10 years to build benefits back to 100%. Ours is built in, again, so no additional premium, and it gradually restores back to 100% on a 5-year scale. So only taking 5 years to have all of their benefits back. So thank you so much for bringing that up, and I'm glad that caught your attention is an important factor to a policy like this. Looking at what's covered for lump sum cancer coverage, again, whether this is a base plan or a rider, your lump sum benefits can range between $5,000 and $75,000. For an internal cancer diagnosis, which includes melanoma, We know melanoma can be considered a form of skin cancer. However, it is invasive, often requires treatment. So that's considered an internal cancer in our book. This pays out at 100% of their benefit amount. So if the individual has a $10,000 benefit, they're diagnosed with internal cancer, they receive a check for $10,000. If that individual is diagnosed with carcinoma in situ, which is also known as stage 0 non-invasive or pre-invasive cancer, this pays out at 50% of their benefit amount. With a lot of carriers, you'll see that carcinoma in situ benefit is either structured like a rider or it may pay out 25%. So again, ours is built into this benefit and pays out at 50% of their benefit amount. And then lastly, skin cancer is what we consider the basal and squamous cell diagnoses. So something like getting a cancerous mole removed would pay a 5% benefit. So 5% of their benefit amount. The reason that these percentages are different, internal cancer is going to require some sort of treatment, whether that's chemotherapy or radiation, which is of course a lot more expensive than simply getting a mole removed down here with that skin cancer basal cell diagnosis. So that's why the percentages look a little bit different there. Then with that built-in recurrence and restoration benefit, gradually restoring back to 100% on a 5-year scale. This 5-year scale restoration period of 5 years does not begin until 100% of the benefit has been paid out. So for example, skin cancer, say the individual has that basal cell skin cancer diagnosis and they receive 5%, then what happens if they're diagnosed with internal cancer within the same year? Does that mean that they only receive 10%, or does that mean that they only receive the remaining 95%? Actually, neither. The skin cancer benefit is completely separate. So as you can see up here, this is payable 3 times within, let me double check myself. Yep, maximum of lifetime of 3. I had my picture in the way and wanted to make sure that was correct. So if the individual has that skin cancer diagnosis and then they're diagnosed with internal cancer within the same year, they would still receive that same 100% benefit for the internal cancer diagnosis. And then after 100% has been paid out, that's when this restoration period would begin, gradually restoring over the course of 5 years. So for example, an individual who has a $10,000 benefit, they had that internal cancer diagnosis and received 100% of their benefit amount. This restoration would begin when they go into remission. So the individual is now cancer-free, and they've gone into remission. This restoration period begins in the first year. They would have 10%, so $1,000 of their benefit built back, $2,500 in the second year, $5,000 in the third year, $7,500 in the fourth year, and then back up to $10,000 in that fifth year. So moving into the lump sum heart attack and stroke benefit, again, whether this is the base plan or a rider, benefits range from $5,000 to $75,000. We cover heart attacks, heart transplants, and strokes all at 100%, so 100% of their benefit amount. Then we also reward preventative measures to maybe decrease the likelihood of a heart attack or stroke happening in the future. So heart valve replacement or repair, aortic surgery, or coronary artery bypass, we cover all at 25%. And then an angioplasty and a stent, which are both covered at 10%. Like I said, both of these have those built-in recurrence and restoration benefits. So still here, no additional premium, gradually restoring on that 5-year scale for a subsequent qualifying event, heart attack, stroke, etc. Now moving into the riders here, we have 4 riders available on this product. First one being the benefit builder. This increases the base plan benefit every year for up to 35 years. So the 3 increased options you have are $500, $1,000, or $1,500. This is an example here that's actually straight from our brochure, which you can locate in the agent portal, of an individual, Sherry, who purchased her policy at age 40 years old. She had a $20,000 lump sum cancer base plan and added on the $1,000 benefit builder rider. Then at age 60, 20 years down the road, she's diagnosed with breast cancer. At this point, taking a look at the graph here, instead of receiving $20,000 that she would have gotten from her base plan alone, she completely doubled this coverage and received $40,000 because of that benefit builder rider that had been increasing her coverage by $1,000 year after year. So something important to note here, this is inflation protection, so it's increasing that benefit over time. It's also a much more affordable route to increase that benefit, right? If you compare, and we can take a look at the e-app, starting with a $20,000 base and adding on the benefit builder rider, it's almost half the price of starting with a $40,000 base plan right off the bat. So something important to acknowledge there, if the individual is comfortable with building that benefit over time rather than having that lump sum right off the bat, this is a great option to consider, and again, will increase for 35 years. One thing to note here is that the benefit builder rider only applies to the base plan, so whether you've selected cancer or heart attack and stroke as your base plan. If you have a situation where the individual wants the benefit builder rider for both on cancer and heart attack and stroke, this is really the only reason I would recommend breaking this up into two separate policies, one with cancer as the base and one with heart attack and stroke as the base. We don't have an application fee on this product, so they're not losing any money or paying any more in an application fee in order to break those up. But like I said, since built-in recurrence and restoration benefits apply to both, premiums don't differ depending on which one's the base. This is really the only reason that you would want to break that up into two separate policies. Awesome. Moving into the next rider, we have the return of premium. So this, we have two options, either a return of premium upon death that's paid out to a beneficiary, or a return of premium upon 20 years, which 20 years after the effective date, it would return all premiums back to the policyholder and it would terminate the coverage from there. So this returns all of the premiums this individual has paid for the base plan and any of the riders, even what they're paying every month for the return of premium. This is included in that return. So there's no fee taken out. It's not only a portion of their premiums paid, it's 100% of all of the premiums they've paid, minus any benefits that have already been paid out. So for example, the individual has that basal cell skin cancer diagnosis. They receive 5% of their benefit amount. Chances are, over the course of 20 years or up until death, they've still paid more money in premiums than they received in that small 5% benefit. So we would just pay the difference between the two, all of the premiums you've paid to us minus the benefits that we already paid you. So again, the return of premium upon death would return those premiums to a beneficiary when the policyholder passes away, as long as the policy is still in force at the time of death. We do have an issue age window here. There's no minimum, so it's 18 just like the base plan, and then it has a maximum issue age of 74. So just to clarify, the issue age is how old they are when they're applying for coverage, not necessarily the current age of the policyholder. So they can keep this rider well beyond 74, they just have to have it in place and have applied for coverage before they turn 75 in order to keep that for the lifetime of the policy. Then that second option, the return of premium upon 20 years, again, returns all of those premiums back to the policyholder 20 years after the policy has been in force, or 20 years since the effective date, and it would terminate the coverage at that point. So they receive their return, and then their coverage is terminated. Issue age window is a little bit smaller here. We do have a minimum issue age of 45 years old and a maximum of 74. So again, they just have to apply within that age window in order to keep that coverage in place. So this rider is really providing that additional safety net, and we'll get into kind of the sales aspect of this in just a moment, but one of the most common hesitations we see with plans like this, particularly cancer, heart attack, and stroke, is what happens if I never need the benefits? I've been paying all of this money in premiums month after month. What if I never have a cancer diagnosis? What if I never have a heart attack or stroke? Then at this point, I've paid all of this money for nothing, right? So the return of premium adds that additional safety net or additional layer of protection, knowing I'm either receiving that lump sum benefit or I can get my money back. Or I'm setting this up similar to a life insurance policy where, again, if I don't receive that lump sum benefit, then I'm setting this up for a beneficiary to take this money that I've invested into a plan when I pass away. So it's a great combat to that hesitation or objection you may receive. And I mean, along with that, I think that yes, you're paying more money on the front end, right? You have to pay the premium to add this return of premium rider on there. But now, again, you have that additional safety net knowing all of this money will be returned if these benefits go unused. Moving into the next rider, we have critical illness. This expands coverage to critical illnesses that go beyond just cancer, heart attack, and stroke. So this also pays out in a lump sum between $5,000 and $50,000. Issue age window has no minimum, but does have a maximum issue age, how old they are when they're applying, of 74 years old. We cover Alzheimer's dementia at 50% of their benefit amount, and then the remainder of these critical illnesses all at 100%. So some of the common ones we see: ALS or MS, end-stage renal failure, major organ transplant, severe burns, you see more than you may expect. So again, if the individual is worried about one of these additional diagnoses, this is a great rider to consider here that would also pay out in a lump sum. Then the last rider we have here is chemotherapy and radiation. This pays benefits, fixed benefits, on top of the lump sum that they receive upon diagnosis, as long as they're receiving treatment. So the great thing is there's no time maximum. It's not like this is only paying out for 1 year worth of treatment and then it's done. It's never paying you again. As long as you're still receiving treatment, this benefit will continue to pay. So I think that that's something important to emphasize, knowing that some riders or some carriers may have this rider only available for 1 year, or only pays a lump sum of $10,000 or whatever that may be. So noting that as long as they're going through treatment, this rider continues to pay. There are 3 different plans you can choose from, that being essential, the lowest level, enhanced, middle, and comprehensive, that highest level of coverage. They cover a variety of different cancer treatments, and some of the important ones I want to point out here, one being an anti-nausea drug. I was training an agent on this product whose wife had gone through breast cancer treatment, and he said not only was this drug an absolute necessity, she could not have gotten through the treatment without it, but it was also expensive. If we could have had $200 every month coming in just to cover the cost of those anti-nausea drugs, that would have been a game changer. Or that bottom row down there, experimental treatment. We talked at the beginning of this slideshow how experimental treatment is almost never covered, if ever covered, by a major medical plan. So if it comes down to it, and that's the route that the individual chooses to take, it's important to have that additional layer of protection or additional level of coverage added on. So up to $200 per day that you can receive for experimental treatment. Some of these do have a limit, limited to 5 months per calendar year, but again, that's per calendar year, rather than just paying once and being done here, or 36 months per lifetime for the hormonal oral chemotherapy right there. So great rider, and it's a very affordable cost also to add on there and have that additional coverage for treatment. So looking at the big picture, I know I've thrown a lot at you. What's included in that base plan? You're choosing cancer and or heart attack and stroke as your base. Those lumps range from $5,000 to $75,000. You have the built-in restoration benefits or recurrence and restoration benefits that restore gradually on that 5-year scale. That applies to both cancer and heart attack and stroke, regardless of which one you've made the base plan. And then along with that, just a couple features to acknowledge or bring back up here. It's issue age rated, so these rates are not increasing as the client ages. You have couple, single parent family, or family plans available, and then we calculate those premiums based on the age of the youngest spouse. For optional riders, we have the benefit builder, increasing that coverage every single year for 35 years. We have the return of premium rider that's available either upon death, going to a beneficiary, or upon termination, 20 years, that would be returned back to the policyholder. We have the chemotherapy and radiation rider, which pays those additional benefits on top of the lump sum that they receive at the time of diagnosis, with no time maximum. As long as they're going through treatment, they continue to receive those benefits. And then lastly, the critical illness rider. This pays a lump sum benefit for a diagnosis of one of the qualifying critical illnesses, which we went over on that table, knowing that there are several additional critical illnesses that we would provide coverage for there. Any questions at this point before we dive into the sales process a little bit?
The biggest thing I would say is it's a must. I've had a cancer plan. I've got no history of cancer. Family doesn't have a history, but we chose one for 75,000, and it's nice. It's a little extra.
Right.
Definitely a good thing
Knowing
to have.
that you have that protection from this point forward
Oh, yeah.
is huge. Absolutely. I think some of the feedback I've received from agents when it comes to selling a product like this is, yes, I know the plan is great, right? I have no doubt that these benefits are incredible and my client could absolutely benefit from them, but I have a hard time knowing how to bring it up because if you are automatically throwing a brochure or a product or an insurance company or benefits at your client, they automatically know this is an additional premium. They know they have to pay more. This can become very overwhelming for them right off the bat. They don't maybe understand fully what the benefits mean. They don't understand what their out-of-pocket exposures are. So for that reason, I really like the needs-based selling process. How can you start by identifying the needs of your client, asking them those effective questions to understand or help them understand what their out of pocket exposures are? And then from there, you can position the product as a solution based on now they have that understanding of what they're subject to paying or maybe what they're lacking coverage for. So positioning the product as a solution and kind of talking through some of those objections that you may see with a plan like this and how to combat those. So when we start with identifying needs, what are some of the common needs or concerns that your clients may have? Or what are some of the topics to cover as you're asking them questions about their summary of benefits or of their Medicare plan, whatever that may be? So a personal or a family history of of cancer diagnoses or of heart attacks or strokes, right? I think everybody on this call knows somebody one way or another, whether that's through social media or whether it's a family member, a close friend, someone you went to school with that's received one of these serious diagnoses. So and I mean, the statistics will speak for themselves, right? 1 in 2 men, 1 in 3 women will receive a cancer diagnosis in their lifetime. So I think that this is important to acknowledge. This individual likely has some sort of personal tie or experience with cancer or a heart attack or a stroke. Second being financial preparedness, right? If the individual has to take a leave from work while they're going through treatment, if it comes to covering financial bills, if it comes to those non-medical costs, right? Making sure that the individual is financially prepared for a serious diagnosis. In the event that they're diagnosed, do they have coverage or do they have a savings account, whatever it may be, for those non-medical costs? If you're sent across the country and you're living out of a hotel, your family members are flying back and forth to visit you, or if you're recovering from a heart attack or stroke and need 24/7 care at your house or in some sort of skilled nursing facility, right? Making sure that you have that additional protection. Chances are that the individual does not, or they would rather not from a diagnosis or for the treatment of a diagnosis, right? So making sure the individual is financially prepared and how that lump sum can step in and cover that issue or that need that your client may have. And then lastly, the emotional concerns. A serious diagnosis like this can, of course, take a serious toll on yourself or on your family members. And the last thing, honestly, when you receive that serious diagnosis that you want to worry about is the financial concerns, right? The financial burdens that come along with that diagnosis. So making sure that you've mitigated that, right? You've gotten rid of that concern because this individual now has that lump sum that can combat the financial concerns and focus more so on the recovery here. So what are some effective questions to ask when you're starting to bring this plan up to your clients? First, if you were diagnosed with cancer, do you know what your plan would and would not cover? So this gives you the opportunity to walk through their summary of benefits. You may see that they have a maximum out of pocket. So once they meet that for the year, they're typically good to go. They may have a 20% coinsurance up until that maximum out of pocket, right? But pointing out, if you receive a diagnosis in October, you start going through treatment, you meet that maximum out of pocket fairly quickly, right? Treatment is expensive. But then January 1st hits. If you're still going through treatment at that point, your maximum out of pocket has reset. You're subject to paying that $3,700 or that $5,000 all over again before you've hit the MOOP, right? Or before that plan kicks in and starts to cover the costs. So second, I would say, have you considered the non-medical costs associated with the diagnosis? Now we have an understanding what your plan covers for the treatment aspect, the medical needs, but do you understand what your plan covers for country, if you have dietary restrictions, if you have a meal service being delivered while you're receiving treatment in the hospital. None of these things are covered by that major medical plan. Your experimental treatment, if that's the route that you choose to take, that's something that's not covered by your major medical plan. So, along with that, now that we've kind of pointed out those out-of-pocket exposures, do you think that a lump sum payout would help you to focus on the recovery rather than focusing on the bills and the expenses that come along with that diagnosis? And if we could secure you with affordable coverage right now that provides you that financial safety from this point forward, is that something that you would be interested in? Having that protection so you can relieve yourself of the financial burden or of the stress that comes along with that diagnosis on the financial and medical side. So as far as sales techniques go, I would recommend identifying their maximum out of pocket or deductible, setting up math equations, which we'll go over here on the next slide, and then of course using testimonials. You can use a personal experience, right? Somebody that you know that's had a cancer diagnosis and maybe what they were subject to paying. You can use some of the examples I gave early on in this presentation of how a plan like this could have changed the trajectory of a treatment or of somebody's life or their family's life, so on and so forth. So with that, painting that financial picture, again, like I said, setting up a math equation, kind of allowing them to understand what they're subject to in the event that they have that serious diagnosis. So this is an out-of-pocket example of a 65-year-old Medicare Advantage client that's diagnosed with cancer. If they have 5 inpatient hospitalization stays while they're receiving treatment, we're looking at a $350 copay per day on that Medicare Advantage plan, coming out to $1,750, right? Chemotherapy, if they go through 6 sessions, $2,400, $400 a session with the 20% coinsurance. Radiation treatment, this could be $1,000 varying on the provider or the frequency of that treatment. Specialist visits going back to their oncologist or follow-ups after receiving treatment, $600 if we're looking at $30 per visit, 2 per month for the next 10 months. And then prescription drugs, those anti-nausea drugs, pain medications, we're looking at $300 covered under Part D, but of course with those copays. So this individual in medical costs, out-of-pocket costs, is looking at $6,050. But now let's jump down to the non-medical costs. And of course, these are all estimations depending on what type of plan they're on, what their copays are, what their maximum out of pocket is, so on and so forth. But medical costs is important to emphasize because there's no protection in place for this, right? So yes, these costs may vary, but your protection is still at 0, right? So looking at first travel to the cancer center or to the hospital, whether that's gas, if you're commuting 30, 45 minutes back and forth, if that's parking while you're in the hospital, this could be anywhere from $200 to $500. Meals during treatment days. Like I said, unfortunately, you're not making yourself a home-cooked meal, or you're not eating a home-cooked meal in general while you're receiving treatment in the hospital. So this is likely paying for meals out. That could be anywhere from $200 to $500. Lodging, if you're sent to receive treatment out of your area, this could be from $1,200 to $3,000 just paying for those hotel bills, or commuting, whether it's Ubers or having a car with you to travel to and from the hospital. Help at home, whether that's cleaning, errands, childcare needs, this could be anywhere from $600 to $4,000. And then, of course, if you're missing work, you're taking that leave of absence and you have an income gap, this could be missing out on $2,000 to $5,000 in the work loss or unpaid leave, whatever that may be. So using just the average of these numbers, taking the middle or median of all of these, we're looking at $8,600 in non-medical out-of-pocket exposures. And again, something that your major medical plan, your Medicare plan, is not providing you coverage for whatsoever. So pointing these out and kind of painting the financial picture for your client, this is what you're subject to paying, and this is how a lump sum benefit, you're receiving $20,000 immediately upon diagnosis. This is how it could completely change the trajectory of their treatment or help you out so you're not stuck with those financial burdens. Next.
Bella, one thing I want
Yeah.
to throw on that one is not only the lost income for the person dealing with the cancer, but what about the spouse?
Right, the family
You know,
members.
now the spouse not working to take care of the other spouse, and yeah, it
Absolutely.
adds up quick.
Right. And working with Medicare clients, we don't necessarily have this aspect all the time, but for a young couple, if the wife is receiving treatment and the husband is spending time with her in the hospital, the children need assistance, right? So this is paying for childcare needs that you may not have needed before. If the mother didn't work and that was her primary job to take care of the kids, this is now leaving them with this burden of making sure that the children are taken care of while the wife is going through treatment. So there's all sorts of scenarios that you can bring up here and something that thank you for kind of emphasizing the importance of that. That it's not even just the individual or the patient receiving care, but their family members as well.
100%.
And something to note there with the family plans or with the couple plans, each individual, even the dependents on those plans, have separate benefits. They all pay out at 100%. I've seen some competitors or other carriers that only pay 25% of the benefit for dependents, so for children on the policy, or only one can be paid out per year. Like I said, we have separate benefits for everyone, and God forbid that a husband and wife are diagnosed with cancer within the same year, or a husband and a child, whatever that may be. Each of those individuals covered on the plan have separate benefits. So they would both be paid out a lump sum at 100% for those separate diagnoses. And then positioning the product as a solution. Why do you need this cancer, heart attack, and stroke policy, right? Of course, it's filling those coverage gaps. It's cash benefits paid directly to you in a lump sum upon diagnosis. So you can use these funds for whatever you need them for, whether that's to cover the medical bills, cover the travel, cover the loss of income, or if the individual receives a terminal diagnosis, right? There's no treatment to be done or no treatment to be had. The individual can use these funds to be closer to their family, move closer to their family, or go on a vacation, go on a cruise, whatever they need this money for, it's theirs, right? So it offers that flexibility, along with the peace of mind and security, knowing that you're eliminating financial stress completely during this difficult time, focusing on recovery rather than focusing on those financial burdens. So next, I kind of want to go over, Luis, you got something?
No, you're good to go.
Okay, awesome. When it comes to explaining these benefits to your client, like I said, I think that this can all become very overwhelming. Something that makes so much sense to us can confuse your client easily, right? It can feel overwhelming for them. So, what are some of the main points to hit on that are going to be important to your client, and how can you explain those at a level that your client understands? So, looking at just a simple 5 bullet points here, right? These are lump sum payouts. And these are paid out in cash benefits directly to you as the policyholder. This is a check being mailed to your house. It's not going through the service provider, not going through the hospital, not going through your doctor's office. These are cash benefits being paid directly to you, and it's in a lump sum. When you receive that diagnosis, you know you're getting a check for $10,000 or $20,000, whatever you signed up for here. Keep in mind that you have those built-in recurrence and restoration benefits. So after you receive that initial diagnosis, if you go into recovery and then 6 years down the road, you receive a subsequent diagnosis, this could be the same form of cancer that's returned, or it could be something completely unrelated, right? A new form of cancer that's appeared. You have those built-in recurrence and restoration benefits. You're not paying anything additional to have these benefits in place. These are provided for you, gradually restoring on that 5-year scale. Next, you have the return of premium rider available. We'll go over that with the objections here on the next slide. But just to note, that's that additional safety net you're looking for. If you don't want to risk investing money into a policy, if you know you may never receive that diagnosis, this provides that additional safety net there. And then lastly, it's issue age rated. So we are locking in this premium rate right now. This is the most affordable rate that you'll ever see. It'll only increase older, but once we get this plan in place, you apply for coverage, you keep that same premium rate for the lifetime of the policy. It's not increasing as you age. So those are just some simple bullet points at, again, a level your client understands and things that are important to them, making sure that they're aware these are cash benefits being paid directly to them, right? So some simple bullet points kind of simplify the product as much as possible to avoid confusing the client and really allowing them to understand the important factors, right? And then lastly, and then I promise I'll shut up, stop talking everybody's ears off, is going through that overcoming objections process. Another kind of piece of feedback that I've gotten from agents is I'm terrified that if they ask me a question or they have some sort of objection that I won't be able to handle it or I won't know how to answer their question. So I added this slide in here kind of in hopes that as I've received that feedback, here are some of the common hesitations that I see, or this is the most common objection that I see. And then how can we kind of move forward from that and again allow the client to understand how these benefits can assist them rather than just focusing on the premium, we're focusing on the benefits and overcoming those objections that way. So first, my health insurance will cover majority of these costs. Yes, I have a 20% co-insurance. Yes, I have a maximum out of pocket, but I'm comfortable with that. So my health insurance picks up most of this. To this, I would say, have you considered those non-medical costs? Yes, you have protection for the medical aspect, but when it comes to the non-medical costs, this is an area where you don't have any protection in place, right? So pointing out that yes, you have medical protection, but when it comes to the non-medical side, which unfortunately is unavoidable most of the time, right? If you're sent across the country, you're paying for hotels or you're paying for plane flights. If a husband is diagnosed and the wife is with him while they're receiving treatment, you're paying for childcare needs, right? So these are unavoidable costs that come associated with that diagnosis that you oftentimes just don't have any coverage in place for. Second, what if I never need to use the benefits? I don't want to invest all of this money into a plan if I never need them, right? At that point, I've wasted my money in premiums because I never needed the benefits. I never had that diagnosis. We have that return of premium rider available. So if that's something that you're concerned about, we can set this up like a life insurance policy, paying these premiums to a beneficiary, or we can set this up to pay you back 20 years from now if you go without that serious diagnosis. And then lastly, I'm healthy right now. I'll think about adding this later on. I can always come back to this down the road, right? With that, I would use the issue age rates to create a sense of urgency, right? Right now is the perfect time to apply because you're healthy, right? That's a great point. You are healthy. You don't have any concerns about receiving that diagnosis, but what happens if you're planning to wait and get this plan 5 years down the road and you're diagnosed with cancer in 3 years? This is affecting your eligibility for receiving this coverage later on, at least for the next 5 years, right? Until you're cancer free. But also, you're subject to a higher premium at that point. So using the issue age rates and using their health as a way to create that sense of urgency. If we get this coverage for you right now, this is the most affordable that premium will ever be. If you're waiting 5 years down the road, you're subject to paying a higher premium at that point. So let's lock in this coverage while we know you can qualify because you're healthy. We know that this is the most affordable those premiums will ever be. And then we know that you have protection from this point forward. If something happens a year from now, if something happens 5 years from now, you have that protection in place. So those are some of the common objections we see, and I'd love to hear from you all if you have feedback as to some of the other objections or hesitations that you see that your clients may have. But with that, I'll throw my contact information up here. Again, that's my cell phone number. You can text me your name and I'll save it to my contacts, or you can always email me as well. And that's what I'm here for, is to make sure that your questions are answered. You have the training that you need in order to feel comfortable selling this product, and that you can be successful in providing those benefits, providing that additional layer of protection for your clients, better protecting them.
One of
That's
the
our
things
that's our main
I
goal.
throw out, Bella, and is I do this for the Medicare when I do the hip and I add the cancer rider to the hip plan, is I'm like, look, cancer doesn't have a timeline. So
Right.
you're more than likely going to hit two max out of pockets. So whatever your max out of pocket multiplied times two, there's your
Multiple.
dollar amount. And then go a
Absolutely.
little extra. Usually, at least for me, I like to do the 10,000 range. It
Hmm.
keeps it in budget. And then I have playing room to go up and down with this thing. And
Absolutely.
so that's just how I've been throwing it in there. It's kind of a, the problem, I don't do enough of it is I forget to mention it. I'm so, I'm like hauling ass trying to get done and move on to my next issue that I have to deal with. And it's just a matter sometimes slow down a little bit.
Well, and the
You know,
great thing about a product like this is we're not working with any time restrictions of needing to sell it during AEP or needing to sell it during the Medicare appointment, right?
exactly.
The next couple of months are typically really slow as we're gearing up for AEP in the months of July, August, September before we hit October 15th. So this is a time that I would encourage you to follow back up with some of your previous clients. They have the Medicare protection, they may have that hospital indemnity. Follow back up and make sure they have that additional protection. These are the months to do it. Right now, while the season's a little bit slower than it will be once we get to October.
Correct. Guys, rest of y'all, if you have any questions, just unmute. Bottom left-hand corner, there's a little mic. You can just unclick it, and you can ask Bella any questions you want. Come on, we've got her.
Informative. I really liked it. And
Absolutely.
I will add something that I mean, a lot of young people right now, they become very aware of cancer problems in, because of their family members. Maybe some of them had cancer before. So I would say a good way of convincing them to purchase the insurance is like because I mean, if we can find a way of they can pay less right now because they're young and healthy and they can purchase additional safety uh while they're aging, it'll be a good way to convince them to purchase the plan. That's what I think.
Right. Absolutely. And I think that's a great point, playing into the issue age rates, making sure they understand how that works, and playing into the fact that they are healthy. Like this is the ideal client, right? You're young, you can afford the coverage right now versus if you wait 20 years from now, you're risking those changes to your health and you're risking having a higher premium at that point, not being able to qualify or qualifying, but your premium is double what it would have been if we applied earlier on down the road. So yes, great point, and I recommend emphasizing those and creating a sense of urgency with that.
One
Okay.
of the
Thank you
terms that
so
I
much.
use for that point that you just made is you're insuring your insurability.
I
In
love
other
it.
words,
Exactly.
we're getting it right now while you're healthy and it's cheap.
Right.
We get this thing later, it's not going to be that cheap, and you're going to want it. And I'm not. I mean, I would love to give it to you, but since I'm also a P&C guy, I throw this comment out a lot to my insureds. You're trying to insure your house when it's on fire. Not going to happen.
Right.
You needed to insure it 1 hour before it caught fire. And it's one of those things. I mean, we don't know. We really don't know what we've got. And yeah, so I throw that out quite a bit. Good point. Really good point.
All right. And then if we want to find more information about it and if we want to get contracted, how we do it?
Yeah, Luis, do
Send,
you want them to reach out to you for contracting?
yes, send me an email. Okay. In fact, I'll post it here on the comment. So let me get my email posted. Send me an email, and what I'll do is I log on to Heartland, and I'm going to send you a direct link for you to get contracted with Heartland.
Okay, perfect.
Okay.
And
And I'm putting it on right now. Insurance. Come on. Can't spell.
okay,
Okay.
I'll send it to you right now,
Yep.
Luis.
Yeah, just send me an email. I need your name, and yeah, I already have your email. Send me your phone number too. Yeah, and we'll get you the contracting. And then these guys are quick. I think by the either today or maybe for sure by tomorrow, you'll be set up and
Right.
ready to go.
Yeah, a lot of
Okay,
times it's
and
same day. If you get that contract filled out this morning, we'll have you approved and ready to write this afternoon. If not, first thing tomorrow morning. So
and
as soon
and I'm
as
sure and I'm sure you guys have an aging portal so I can log in and do everything from
Yes,
there.
absolutely.
Okay.
You'll receive a welcome email from me once we have your contract approved, and that'll have some instructions on how to get logged into the agent portal, as well as some of the resources that you have available for additional training or marketing purposes. And then along with that, we're to access the e-apps and start running quotes and make that first sale.
Thank you so much, Bella.
Of
I do have
course.
a quick question.
And
Yes, absolutely.
give me 1 minute. I was going to share. This is the agent portal. So on here, you've got whatever you need. You can pull your supplies up here. You choose your state, and then you've got your brochures. I think they can even order brochures, right, Bella?
Absolutely. If you click that little blue drop down arrow under Chaz, or yeah, that's a hospital indemnity. You can download electronic copies of those documents. You can also select a quantity over there on the right-hand side. So say you want 20 copies of the brochure, put a 20 in there next to brochure, and then you'll click the submit order, that blue button at the top. That sends the supplies order to our agency services team, and then they typically get those shipped out within the same day as well. Our team is pretty incredible over here. They're rock stars. So you're not usually waiting on us. If you do need to call in with a question, you know that somebody's answering the phone, right? You're not waiting on hold for 30 minutes or transferred to four different people before you can get your answer. I had an agent yesterday say, "Yeah, I was honestly shocked. I called in and wasn't expecting to get a real human on the other end of the phone within the first ring." Right? So you have those points of contact and you have that support that you need when you need us. That's what we're here for.
Perfect. Perfect. And go ahead. I'm sorry, I cut somebody off. Go ahead and jump in.
Okay. So if you have someone enrolled in a cancer heart attack plan, but they didn't enroll for the return of premium, do they cancel that plan to get into the return of premium, or can it be added?
Yeah, unfortunately, in order to increase benefits or add benefits onto a plan, we do require a new application. Reason for that being if somebody has a cancer plan and then all of a sudden they want to add heart attack and stroke coverage, we do want them to go through that underwriting process again, answering the health questions, making sure that they're good to go. So if that individual wants to add the return of premium rider, I would recommend reapplying and then you can terminate or cancel that current policy.
Perfect.
You can decrease benefits. So, say the individual has a rider on there and they want to drop that off, or they have $10,000 of coverage and they want to drop that down to $5,000. You can decrease coverage without requiring a new application. That's just a matter of calling into customer service and making those adjustments.
Decrease, yes. Increase, no. Perfect.
Yes, that's it.
That's it. Thank you.
Thank you for your question, Terry. And then now I'm wondering if someone adds the premium rider and then they cancel the policy, they get the premiums back also?
Unfortunately, the return of premium has those two options, either the return of premium upon death, so that would return premiums to a beneficiary upon death of the policyholder, or there's the return of premium upon 20 years. So if they have that return of premium upon 20 years and they cancel the policy 10 years in, they wouldn't receive that return since it is a 20-year anniversary from the effective date that we would return those premiums. So
Understood. Okay.
yeah. If they end up canceling within the 5 or 10 years after the effective date, then they wouldn't receive a return at that point.
Okay, thank you.
Of course. Any other questions? All
We're
right.
rocking. Awesome. Hey, thank you, Bella.
Yes, thank you again for having me. And if you guys need anything on our end, feel free to reach out.
Sounds like a
Have a
plan.
great rest of your week. Happy
Hey,
early
thanks for
4th of
being
July.
awesome. Thanks for being on here. Have a good 4th of July. Bye-bye.
Yes, you too. Thanks, guys. Bye-bye.